Well, if you have an exit strategy, that means you're thinking about selling it at the time you're buying it. You're not going to do that without research. If you don't do your homework, you could make a big mistake and buy a property that doesn't have value.
Welcome to Tax Deed Sales in Texas, the 5 most important factors you have to consider. Of course, we're here with Ted Thomas, who is the Tax Lien Certificate and Tax Deed Authority. And Ted, you're going to be addressing these 5 really important factors that people have to consider before they do some investing in Texas. Ted, let's start by just the understanding. How do tax sales work in Texas? Are they tax liens? Are they tax deeds? Fill us in on that, please.
First of all, they're tax liens in the sense that the state or the county is assessing a lien against the property. However, when they sell it at the auction, they're actually selling a tax deed to the property. A tax lien is a lien against the property. It attaches to the property, and that's what happens before they levy a property. But when they're going to sell it, they're going to sell a tax defaulted property, which is a redeemable deed. So they're going to sell a redeemable deed. I hope that helps you out.
So here's the first important factor we got to consider, and that's the rules. Ted, could you explain to us, how does somebody get the rules to an upcoming auction? And what kind of information can they be expected to see on those rules?
Okay, well, Texas, that's the second biggest state in the United States, and they have 250 plus counties in the state. So each one of the counties can have its own rules, okay? So all of the rules for the state come from the legislature way up at the top, and then they filter the rules down to the Board of Supervisors and the county commissioners. And then those county commissioners decide what exact rules they're going to use. So anybody can have access to the rules. And in order to do that, you just go to the county website and you find the rules for tax defaulted auctions.
And what kind of information are listed on those rules, Ted? Maybe just an overview?
They're going to list the property, and that's done by a number, so that every property will have its own ID number. Then they're going to sell a redeemable deed across the table to an individual at an auction, and then the money's going to come to the county. Okay, now the county's got the money, but the person that bought the redeemable deed's going to earn they're going to earn 25% return on that certificate, and they can earn that in 1 day. So if someone came in and paid, you could earn that 25% in 1 day. So there's going to be lots of things on the website that's going to be there. It'll tell you about the property. It'll tell you the assessed value of it. It'll tell you the description of the property. And it'll give you all the pertinent information that you want to know about a property before you ever bid on that deed.
Well, listen, a second very important factor to consider is the redemption period. So with Texas being a redeemable deed state, you might not get the property. So could you explain, Ted, what the redemption period is in Texas and what happens if nobody comes in to redeem?
So this is a different process than happens in the majority of the states. So this is a redeemable deed state. So the county is selling a deed. In other words, that's a piece of paper. They're going to sell the deed to the property, but it's a redeemable deed. Now, what does that mean? That means for any time from day 1 all the way to day 180, anytime that the property owner comes forward, they can buy their redeemable deed back. So they just give the county the money, whatever you paid for that redeemable deed, plus a 25% penalty, and then they get their deed back. So Texas is one of the most profitable states for making money with tax defaulted properties. So it's not a complicated process. Now, if it happens to be an agricultural property that went through a homestead or something like that, those kind of properties, they could last as long as 2 years before the redemption takes place. But overall, we're talking about homes and things like that. So if you raised your hand and you bought a redeemable deed, it's only going to stay outstanding for 180 days. But there are occasions it could stay outstanding for as much as 2 years. So you need to read the rules and know what you're doing.
And Ted, what happens if nobody comes in to redeem?
If people don't come forward to redeem their deed, then you're going to end up with that property. You're going to own that property because they didn't come forward to redeem it.
That kind of leads us to our factor number 3 that's really important, and that's research. And I know you talk about this all the time, Ted, but can you explain why is property location so important when you're purchasing property in Texas?
Location is everything with property. All right. Now, state of Texas has a little bit of everything. When I say a little bit of everything, on the southern part of the state on the Atlantic side, They have wonderful agricultural properties that could be worth as much as $25,000 an acre. If you were in Dallas or in Houston or San Antonio, major cities, then you're going to have very expensive property that could be office buildings, could be expensive homes, could be whatever. If you're in the western part of the state of Texas, you can find out there that you're out in the middle of the desert and the property, an acre of land isn't even worth $100 because it's all dried up in the desert. Then there's the middle part of the state, the Midland as they call it. In the Midland part of the state, that's going to have all the oil wells. So as far as you can see on the horizon, there's oil well. So location is everything. So if you're buying in Texas, you can be buying in any number of places. So you don't want to just go put my finger on it and go like that and order a property up or something. No way. You need to look at the location of that property and make sure that you know what's going on there.
And beyond the location, Ted, what about just the condition of the property? What are the types of things you should look out for or consider?
Well, massively, you need to look at that condition. So location means a lot. So let's say you found a property, you're looking at a picture of it, and the next step should be you should go and look at the property. You actually should have boots on the ground. Now, when you get there, what's there? Is that a nice neighborhood or is it a poor neighborhood? What is it? Because you can have the best property and then it's in a poor neighborhood. How are you going to sell it? So you want to really think about that. All right. Now, when you're looking at that neighborhood, that's a condition to be concerned about. But what about the condition of the property? Is there a hole this big around in the roof? Or is it a good roof? Is the building slanted because it's settling? Have they been taking care of the outside, the landscaping, the painting, the whatever? I mean, condition, when you buy a property from the county, they're telling you that you're buying as is. Now, whatever's wrong with that property, it's going to be your problem condition-wise. And when you're doing your research, you need to research the title on the property because the title, the county is not telling you that there's not any defects in the title. Condition of the property and condition of the title are very important. You're not going to do that without research. Doing a business like tax defaulted property in Texas or tax deeds in Texas, I can tell you right now, you need to do your homework. If you don't do your homework, you can make a big mistake and buy a property that doesn't have value.
Research is definitely important. The fourth very important factor is the property location condition. We just talked about that. You already hit on that, Ted. And that's kind of part of the research, but very important to take advantage of. So that brings us to our fifth factor you really got to think about when you're buying tax deeds in Texas, and that's the exit strategy. Ted, I know this is something else you talk a lot about. And
Right.
You already mentioned that the redemption period in Texas is anywhere from 180 to 2 years. Before you buy that property, you got to have an exit strategy. So what happens if the home doesn't get redeemed? What types of things do you need to think about that exit strategy, Ted?
First of all, when you're looking at a property, if you're just driving by in a car, everything looks the same. If you happen to be buying, let's say you're buying grazing land in Texas. Grazing land, there's going to be a lot of it, but does it have water? Does it have proper drainage? Does it have power? Does it have fencing? There's a lot of things that you need to be concerned about. So if you haven't looked at that property and thoroughly figured out what it is and how you're going to sell it. So, all right. So now you're going to think about an exit strategy. If you have an exit strategy, that means you're thinking about selling it at the time you're buying it. Now that's the way to be in the tax defaulted business. So Texas tax deeds are really a lucrative business, but once you buy it, you're going to own it. So before you buy it, who are you going to sell it to and how are you going to go about selling it? So I say if you are buying residential property, for example, homes or residential lots, why don't you use the MLS and research that? Why don't you go on eBay? Why don't you use Craigslist? Why don't you use Zillow? You're getting the idea. Okay, so as many possibilities as you can to find out what the value is before you buy it. Okay, so don't wait and do your exit strategy afterwards because you might pay way too much for this property. Now, at the auction, an auction is an exciting thing for a lot of people. They just keep bidding because they want to win the auction. You don't want to win the auction. You want to win a property at a very good price. And so you've got to make sure what price you pay for that property. Well, you pay a price based on the selling. In other words, on the exit strategy. So if you haven't done all the things that I just mentioned and you don't know how to use media, you don't know how to just put up signs, you don't know how to do any of this stuff, you need to think about how you're going to sell it before you buy it.
So to recap what we just heard from Ted, The 5 most important factors when you're going to purchase Texas tax deeds: the rules, the redemption period, research, property, the location, and the condition, and you have to have your exit strategy. The 5 things you need to know.